Welcome to the online platform Education Unlimited. And today's accounts presentation will be on the Sales Journal. And we start off all first by looking at the use of the Sales Journal. So, the Sales Journal is the book in which all credit sales of inventory are entered before the entry is made in the sales ledger. Additionally, the total credit sales is also posted to the sales account in the general ledger. Today, we will look at each of these steps. So, the first step is that we post all the credit sales to the sales journal. Secondly, we post to the sales ledger in the respective accounts on the debit side the entries that were posted in the sales journal. And then thirdly, we transfer the total to the sales account in the general ledger. Very simple. So that we will post to the sales journal first of all, and then we will transfer this to the sales ledger. Afterwards, the final transfer would be done to the general ledger. But we must note that this would be a series of debit transactions, and on this side, this would be one total of a credit transaction as we move along. Let us take a look at this example. It reads, enter in the sales book the transactions below. Post the items to the relevant accounts in the sales ledger and show the transfer in the sales account in the general ledger. The transactions read February 1, credit sales to A. Brown, $250. February 2, credit sales to B. White, $150. February 5, credit sales to C. Gray, $230. February 7, credit sales to D. Green, $100. February 8, credit sales to A. Brown, $150. February 10, credit sales to B. White, $90. And then we will look at the final transaction. February 13, credit sales to C. Black, $120. First thing that we will do is to enter all these entries into our sales journal, also called our sales book. So here we have a blank sales journal, also called a sales book, and the columns, one for date, one for details, also called particulars, one for invoice number, although in this example we do not have invoice numbers, one for folio, and one for amount. So the first transaction is on February 1. The name of the customer is A. Brown. Skip the invoice number and head to sales journal, which is the sales ledger, which is the folio. The amount is $250. Second transaction is on February 2. Name of the customer, B. White. Folio, sales ledger, amount $150. Third transaction is on February 5. Name of the customer is C. Gray. Again, we skip invoice number and go to the folio, which is sales ledger, and the amount is $230. On February 7th, there's the fourth transaction. Name of the customer is D. Green. Skip the invoice and go to the folder, which is sales ledger. The amount is $100. And then on February 8th, we have the fifth transaction. Name of the customer is A. Brown. Folio, sales ledger. All of these folio will be sales ledger. The amount $150. Then on February 10, name of the customer, B. White. Folio, sales ledger. Take it step by step. The amount $90. On February 13, name of the customer, C. Black. Folio, sales ledger, and the amount being $120. So at the end of the month, let us say this month was February 28th. The end of the month, February 28th, we transfer to the sales account. So this is the final outlook of the sales journal after this example. February 1, A. Brown, sales ledger 250. February 2, B. White, sales ledger 150. February 5, C. Gray, sales ledger. And although I'm saying sales ledger, let us know that this is a folio. SL stands for sales ledger. So we were at February 5, C. Gray, sales ledger 230. February 7, D. Green, sales ledger 100. February 8, A. Brown, sales ledger 150. February 10, B. White, sales ledger 90. And February 13, C. Black, sales ledger 120. Making a total of $1,090 transferred at the end of the month, February 28th, transfer to the sales account in the general ledger, and the folder would be GL standing for general ledger, making a total of $1,090. Sales journal, also called the sales book, the first example. Note the date column, details column, also called the particulars, invoice number, which in this transaction we do not have. folio, and amount column. And it must be noted that at the end of the month, we transfer all of these transactions to the sales account in the general ledger. Remember now that these are all credit sales. This means that we did not get any payment from these customers for these transactions. Credit sales, sales journal, sales book. The second step in this example is the relevant personal accounts in the sales ledger. These are the accounts of our customers. A Brown account on the debit side, February 1, sales, the folio being sales book as it comes from the sales book, the amount 250. On February 8th, again, A Brown bought goods from us on credit, so we put sales, SB for sales book, and the amount 150. So this is in A Brown's account. Then we move down the line to B White's account. So in B White's account, there were two transactions for the period under consideration. February 2, sales SB folio and the amount 150. On February 10, the detail sales folio SB, the amount 90. Then we move down the line to C Gray's account. On February 5th, detail sales folio SB, amount $230. And then we move down the line to D Green's account on February 7th, detail sales folio SB, the amount $100. And then the final account was C Black's account on February 13th, the amount $120, detail sales folio SB. So here we have it. These are the personal accounts of our customers in the sales ledger. Note all of them are entered on the debit side of the relevant accounts. So our third and final step is to post this total entry in the sales account in the general ledger on the credit side. So note that at the end of the month, February 28th, under the detail columns, we put total credit sales coming from the sales book SB under folio and the amount $1,090. Note also that we place SB in this example as the folio, but it depends if you had entered the first entries in the sales journal, then your folio would have been SJ. Also, you must note some books use sales daybook, so it would have been SDB for the folio. Very simple transaction. First of all, we post the entries to the sales journal or the sales book. Then we put the debit entries in the personal accounts in the sales ledger. And then the final step is to post the total of the credit sales in the sales account in the general ledger.